Well, thank you so much, Max, for being on and spending time with me. Yeah, so I guess just Coverage Cat has been around C Company. You guys are in the thick of it in the insurance space. We're a fintech podcast. We talk about everything about, like, I would say identity to money movement to like where the direction of like crypto is going, that sort of stuff on the podcast. Coverage Cat falls into that category of, I would say, fintech, where you're actually figuring out like how to protect people's wealth. I might be pitching it wrong, but just a little background on you guys. Like maybe you could talk about like you and your co-founder, how you guys met, a little of your history as a person, just to kind of give some context of what your company is and how it was created.
Absolutely. So Gabriel and I started Coverage Cat together 2 years ago, and I've known Gabriel for over a decade. We went to college together, and in college, we actually worked together at the Yale Daily News, and we had a good time doing it. But every once in a while, he would just pitch me on one of his zany ideas. Go quit your job, come start this thing with me. It's going to be fun. And finally, I think one time I was like, what about going and working on insurance? And I think he was pretty negative. I think he was like, insurance has got to be the most boring topic on earth. Why would we go do that? And it's one of those things, maybe I just wore him down on it. And finally I was like, okay, let's go do this company. You want to do that? And he was like, sure. And that's how we began it. I think it just basically started with two friends riffing on ideas of things that we wanted to see in the world and things that we thought didn't work well. And that's, I think, a great place to start a company around.
So why insurance? Like what made you so into that space versus so many different directions you could start a company in? Like what was your passion? And like most people kind of brainstorm on ideas. It seems like that stuck with you for some reason. Like why that?
I've had my first really bad insurance experience when I was in high school, and I knocked out some teeth and had to get them replaced and had to figure out a lot about the nuances of dental insurance and health insurance to navigate that. And ever since then, I was just thinking, oh, this is a pretty broken system that people know is broken, but don't have any ideas on how to fix it. And personally, I think it's really important for anybody starting a company to know their own weaknesses. And I don't really know how to make the world better in myriad ways. Like I don't know how to, fix climate change. I certainly don't know how to make it so that everyone is living their fullest life. But I do know that insurance is a pretty commodity product that is vended by a pretty diverse set of vendors. And people buy the wrong product regularly, and it costs them. And it costs them because something really bad happens to them and it doesn't pay out. Or it costs them because they bought a thing that was way too expensive and it wasted their money. And I'm like, okay, well, saving people a small portion of their money in their life, that's the thing I know how to like begin to work on. And so it's the right intersection of like, does my skill set and interest work? And do I feel like I can see a path for how this could be better?
I see. So I mean, reading between the lines, it sounds like market size was like something. When you said commoditized, I heard market size, like big market size. Like, was that your
That's
thinking,
not,
or
maybe I should explain. That is very interesting. So the first thing I'm just saying is like, you need to know what you're capable of doing. So point one is that. Point two then becomes, is this a business? And to me, a business is just a group of people who are able to work on a problem together and have it pay for the food on their table, right? Like at the end of the day, you need to make sure that your employees and everyone who's working on this endeavor are taken care of. And the business part is that. And the business part that makes insurance an exciting place for a company like Coverage Cat to enter is because insurance is such a massive business, and it is one that has such weaknesses in how it's currently bought and sold, in my opinion.
got it? And weaknesses like people are confused about what they're buying. I definitely think that there's confusion in the space around what you're covered for. Like sometimes, a credit card will say you're covered for like water damage to like electronics. And then the person kind of is like, yes. And then 20 years go by and then their laptop water spills in the laptop and they don't remember. Or you have family members who maybe they like are not all there anymore and they don't know what they're covered for. Or family members who don't realize like what insurance might protect them from disaster. Like, is that where you're going with that? Or what do you mean by
So I think it's tough to talk about this without talking a little bit about history.
Okay.
And sorry to anyone whose brain is turning off already, but the history of insurance is an incredibly long history of business. And what started out as people trying to manage the risk of whatever transatlantic maritime shipping, where you don't know if the ship's going to come in, has transformed into a business that's basically driven by two major factors: regulation and the bad history of companies behaving badly and consumers getting burned and things like that, and the societal demand that people end up covered for the risks and externalities that they create. And the tension between those two things is basically what has driven the American insurance industry to the place that it is today. There's a secondary service that personal insurance does that is basically like the thing that everyone can blame, the scapegoat that everyone can happily blame jointly. And so, like in the world of medical insurance, which is not what we specialize in, but just speaking on that for a moment, insurance is a beautiful scapegoat for everyone who wants to not take responsibility for what's driving high costs. So you know your doctor, you love your doctor, but your doctor is not the source of these high medical costs. This is the insurance company. And in that sense, I think the misunderstanding is you need to have somebody in the system that you can try to blame as the separation between the true price of your actions, the true price of your preferences, and the actual price that people end up paying. And for what it's worth, we started Coverage Cat to help people buy less insurance. For many people, they're overbuying insurance on the low end. You know, all those little tiny insurance products that really don't protect you from catastrophe. That's the stuff that we're against. In my opinion, you should actually never buy those things. Those are basically always financially incorrect products.
So you went into the consumer side of insurance, not the corporate side. I mean, there's so many insurances out there. There's insurance for executives, D&O insurance. There's insurance for, corporate cars.
D&O insurance. So we don't
Yeah.
do commercial insurance, but
Yeah.
I just want to take a moment to talk about it.
Yeah.
D&O insurance is interesting because whenever you're buying D&O insurance, you should carefully think to yourself, who is the policy for? Generally speaking, D&O insurance, I mean, I'm not your advisor here. I'm not giving you advice, but it's to protect the company from its officers. And if you're the officer shopping for it, I think you should be asking yourself who it's for.
Got it. So you're saying D&O insurance doesn't protect the executives? Is that what you're saying? It protects the company from disaster.
The classic scenario is maybe you hire someone and they perpetrate a financial misdeed or a fraud against your company. They're embezzling company funds. D&O insurance might pay out for that kind of a thing. So the company is what is made whole.
I see. So it's protecting the company. I know that there's other protections, like if the CEO dies, you may have, I don't know if that's covered in D&O. Maybe that's a different insurance.
That one is a really complicated area. There's a lot of life insurance products specifically designed for that kind of thing, and they come in many different structured forms depending on your desire. But if you're a startup founder, I think it's appropriate to plan that if you don't make it, your company won't make it. But also your concerns are going to be someone else's problem at that point.
Yeah, exactly. That's the dark side of startups. You need the founders at the early days. So you went into consumer, okay, and then you felt like that was the right market for you guys. Was that intentional, or were you exploring for a while? Did you know exactly what you were going to go for in insurance?
You shouldn't go into consumer insurance. This is my first piece of advice. Consumer insurance is a significantly more competitive and difficult place to try to make a great business, in part because people have done a great job carving up the landscape and making better, more efficient products. In the commercial world of insurance, I believe that there's significant amounts of inefficiency that make it much easier to go and start. There's other challenges, to be sure, but the inefficiencies are much more visible. But we went into consumer insurance because that's the thing that I am personally passionate about. That's the thing that I believe we can really solve, in which, there's hundreds of billions of dollars spent in personal lines where people are buying inappropriate products for their needs. And breaking the cycle, breaking this kind of mistake is a very large scale problem if you can succeed at it in consumer.
What is an example of that? I guess the insurance companies will push a product that the likelihood of that disaster happening is basically zero. Does that happen? Like, it sounds like that happens so often that it's literally.
That's one of the most exciting parts about this to me, is that
Hmm.
actually if insurance was a perfectly efficient product, you should be indifferent to the likelihood of a catastrophe happening. Like, it doesn't matter if it's 1 in 100 or 1 in 10,000, assuming that the product is priced appropriately, priced efficiently, then you should be totally neutral about that. But the thing that actually really rankles with me is, do you drive? Do you have a car?
Oh yeah, I love driving. I mean,
Okay, so when you picked your, let's say, auto insurance deductible, how did you decide what the right amount was?
for me, it was more around pain and suffering of trying to. I wanted to just not have the hassle of working with the insurance company, so I have a higher deductible.
That's a great answer. And so
Mm,
many people don't have that as their answer. So many
mm,
people are talked into, let's say, a $500 or even a free windshield replacement kind of deductible policy. And they don't realize that making those choices actually makes their choices down the line much harder. Let's say you pick a really low deductible, $250, $500, and something slightly bad happens. Your bumper gets a little damaged. Now you're faced with the tough choice of, should I file this claim with my insurance? And exactly as you just said, oftentimes at those small dollar amounts, you're much better off just taking the hit personally. And if you plot out the math long term about how your prices are going to be higher because of having a claim incident, it's almost always financially correct if you're wealthy enough to bear the risk to take on higher deductibles. So why is it that high deductibles are not that common in the industry? I think it's because people are like, oh, I should just buy more insurance, but really it's an inappropriate product for many of them.
interesting. So you're saying high deductibles are generally like favorable and like better for the consumer because you may
If you
not.
are wealthy enough to take on
Mm,
that risk personally,
mm,
if you're not going to go bankrupt from an unexpected, let's say, $2,000 bill,
yeah.
then it's much more efficient in the long run to take on higher deductibles. That's right.
Hmm. Interesting. And you're so like, there's so many insurance companies out there, like your startup, there's money flow, there's things happening there, people are getting paid out, like, but I guess the question for me is how do you layer on top of all the insurance companies, or do you just pick and choose who you partner with? It sounds like they may not even like you guys because you're like kind of taking some of their cash and getting it back to the consumer, right?
There's a significant tension in the industry overall about people like coverage cat brokers, people who advise people which insurances to buy.
Yeah.
It's a love-hate relationship because the people who are at the end, the bag holders, the carriers, are like, well, do we really need these people? Oh, it turns out they're very important for distribution in some categories. Why do we pay them? Blah, blah, blah. All those kinds of things. And then there's also, of course, the conflict between the end buyer, who's like, why am I paying for these things? No, by regulation, you basically are never paying for our kinds of services. But our mission is much simpler. The mission I had originally was just, why don't any of these insurance companies tell me their prices? Why can't we build a database of prices? And if you've ever gone through buying insurance, I'm sure if you've shopped around for it, you've been like, oh, this is a terrible flow. Why don't they show me a price?
I see. So you said a lot there. And picking that apart to regulation. So you're saying that the government in some way is saying your product should be supported, but then you have the tension from the insurance companies saying we don't really want people to know the prices. So when a consumer comes to you guys or they go to their insurance broker and you're introduced into the flow, it sounds like it's like actually a benefit to the consumer and there's no cost. Am I saying this the right way?
We charge nothing to people. We're absolutely free. That's exactly right. And the second thing that we do is basically we show you prices for insurance companies, even ones that they would be, let's say, reluctant to show you. And in some places, we find you companies that will never sell directly to you. They only sell through brokers like us. So those are places you can't go to, like a website, and buy from them. And then the third thing that we do is we try to pick a policy that is optimal for your preferences. And that's actually quite challenging. And the thing that I think people are most let down by. There's an insurance salesman in the Bill Murray movie Groundhog Day, and that insurance salesman is, I think, an unfair but accurate caricature of just constantly pushing more insurance. And we come in with the attitude of, For rich people, you should buy more high-end insurance, but less low-end insurance. You should retain that risk to save yourself money in the long run. And for poorer people, you don't need to worry about high-end insurance because your plan is probably bankruptcy. But of course, you would be much more upset about a $500 loss than a wealthy person might be. And so selecting that right thing is the second portion of what we do. And that's really not what other agents, I mean, it's what a great agent does, but it's not what most agents do because they're in the business of selling insurance. Not their fault.
I see. So the business is really run by profit right now. And profit,
Like many businesses.
yeah, run by profit makes sense, but it sounds like they're hiding cost efficiency a lot of the time just to make that profit higher for themselves. But you guys are not making money off that. Like, why would they introduce you into the flow? Like, I guess is the consumer saying, I want to use this? Or does the
Consumers
broker?
can benefit from brokers, but and I'm a consumer. I have a lot of respect for consumers. Most of the time, you actually don't realize when a broker can benefit you, and that's no one's fault. That's just like if you've ever been buying a financial product that you didn't understand, I bet there was a chance that a broker could have helped you, but you didn't know it. You have a really crappy bank account and it's paying 0% interest. Well, it turns out there's depository brokers who can fix that for you. You can fix it yourself, or you can have someone do this for you. That's all. And in the world of insurance, brokers generally cost you nothing. There are fee-based brokers, but we're not one of them. And instead, brokers get paid by insurance companies for the products they sell. So that's where the money comes in, basically. And you're like, oh, are they then marking that up? And then the answer is basically no in consumer insurance. But that has a lot to do with the regulation aspect, basically.
Got it. And what is the regulation? Like, what is that? Maybe you can do a 1-minute crash course.
Oh, there is no way to do a 1-minute crash course of insurance regulation. Insurance regulation is fundamentally an impossible task. And it's fundamentally impossible because there is an irreconcilable difference between what the public wants and demands of insurance that is mutually exclusive. And basically, people say, I want to pay the risk that precisely I generate, which even if you could mathematically produce it, is a challenge because people also say, I want you to group me in a risk pool of similar people, and that risk pool must not be discriminatory. And those are, of course, mutually exclusive because if it's a price tailored specifically for you, there is no pool. There's only you. You're sufficiently unique that that's not possible. And so the regulation is just a world in which we as society try to decide which are the groupings of risk that we think should be blended and which should not be.
Got it. And I'm assuming the regulation is like for the benefit of like just general US citizens, or is it like
I think that's the ideal version. I think in practice, consumers are let down pretty heavily by insurance regulation. Just to draw maybe an unfair comparison here. In investing, if you invest your money with Charles Schwab or Vanguard or Fidelity, they charge you fees on your investment. And the fees that they charge typically are on the order of like 0.1%, 0.001%, depending on the product that you're buying. Very, very small. How much money do you get back from insurers for every dollar of insurance you buy? You get back about 50 cents. So a different way of thinking about the fees of insurance is that it's 50%.
Got it. Okay, so just I guess changing topics a second, going back to you and your co-founder, like it seems like you've been in tech your whole life, like working in tech companies and software. You were not in the insurance industry at all. And a lot of the founders I talk to, or the fintech people I talk to, or just people that are entrepreneurial, either they came from a background in like fintech or insurance, or they haven't. And you're in the latter where you have not had this experience before, right? Or maybe you have, but just
No,
looking
that's
from
correct. I've never
like
worked in an insurance company prior to starting one. That's absolutely right.
so just looking at that, like that in itself is a challenge and a learning curve. Would you recommend founders like go into a startup with just an idea and a concept, or do you recommend they have to have some experience in that?
Depends on the industry. I wish I knew more. I always wish that I wish I had 20 years to develop a deep understanding of the industry. There's things that I would love to know about that I don't have. But startup founders are faced with too many problems. And one advantage that they can have is their ignorance can actually enable them to ignore the difficult road that they face and the reasons why their ideas are wrong and won't succeed. And that is possible to fake, and it's also possible to just be blissfully ignorant when you want to go start your company. When we started Coverage Cat, I actually wanted us to do, a full stack, be the whole insurance pipeline kind of system. And I basically discovered that we were not going to raise the billions of dollars of capital required to make that work. And I was like, oh, well, that idea's out. Guess we're doing something simpler. And if I knew the first thing about insurance, I would not have even had that idea. But maybe if you're someone like, I don't know, I mean, Elon Musk is kind of a crazy person, and it seems like he's the kind of person who would gleefully not know about the challenges of being a full stack insurance provider and instead just go do it. And that's a thing that he can do that perhaps, if someone who knows more wouldn't.
Interesting. I know Warren Buffett was an expert in insurance companies. I don't know if you know this. So he realized, like, I'm good at investing in insurance companies. You can make a lot of money in insurance companies. And he understood the mechanics of it. So he invested heavily, and that's where a lot of his wealth was created. I don't know if you know this.
Oh yeah. I mean,
you do.
Yes. Yeah. It's the second or first largest consumer insurance company in the US. Definitely. Yeah.
Did he have a factor in you doing this, or not at all?
I think that I don't know very much about Warren Buffett. I don't think that he and I think about this problem similarly. I think, from my limited understanding of Berkshire Hathaway's view of insurance companies, is that it creates significant opportunity for float management, which is an investment idea that is, we're not sensitive to. I will say, Geico, a lot of respect for what they do and their company. They have had a really challenging couple of years in the past couple of years. So insurance is a hard business.
Why was it challenging? Was it
they paid out far more than they took in? They just lost hundreds of millions of dollars.
So you guys don't have that risk. So financially, that's not your problem, I guess. So that
we have other problems, but we don't have that problem. That's right.
Yeah. I mean, that's a good thing. So you're more robust to actually what insurance companies do. If there's a disaster in California, that's not a risk for you guys going bankrupt. But I guess for a farmers or a Geico, that's a massive risk.
Right.
Them.
Although carriers pass on their risk. So their goal is usually to resell that risk or move it to someone else's books, either through reinsurance or through a more specialty technique, depending on what they're producing.
Interesting. So is that a problem for the consumer? Because then the consumer is shielded from what is actually happening?
It could be a problem. I think the chief way that you would see that, and you would end up seeing that as a problem, is as reinsurance rates rise dramatically, that cost comes to somewhere. And one place that's really hit people in the past couple of years is reinsurance prices have risen dramatically. We're talking double-digit % increases. And the subsequent result has been people seeing hundreds or thousands of dollars of bills higher in their renewals. And they're like, nothing about me has changed. Why am I paying twice as much for insurance? And the answer is the reinsurance rates have moved on you.
Was that due to inflation, or was that due to actual disasters, or was that something else?
Insurance gets hit in two places. It gets hit in several, more than this, but two huge places for inflation. The first is raw inflation negatively affects insurance, because if the cost of building your house doubled, then the cost of the insuring your house has also doubled, naturally. And then the second point is if the rate of risk-free return, where you invest your money, has changed. So let's say you can go buy US T-bills at 5% instead of 0%, then it's a lot less desirable to invest your money with speculative insurance. Why would you buy a whole bunch of Florida flood water risk at 8% when you can buy US T-bills at 5%. That changes those numbers.
I see. Okay. Interesting. Where do you see the insurance, like taking a step back? I mean, you came in with a very unique product for consumers. Where do you see like the future of insurance? Like, is it going to be tech driven? Will there be a lot of AI? Will there be better UIs out there? Will people be more informed, or is it not going to change much? Like, what do you see happening and the trends?
I think there's an article from maybe 45 years ago in the Wall Street Journal that was the end of the insurance agent. And 45 years have gone by, and there are, I believe, today more insurance agents employed in the United States than at the time that article was written. So people have been trying to crack this nut for a long time, and it mostly hasn't made progress. But I don't believe it's sustainable in the long run for everyone to basically call people every time they want to deal with their insurance problems. And it's really just a question of when is that dam gonna break? And I'm hopeful that this is the right time to redo this.
Okay, so you think like in the future there'll be an AI bot, and you'll say, my rear bumper was scratched and I would like to get that fixed. The AI bot would like analyze it and then just give you a payout, like depending on.
There are companies actually working on that exact scenario. A very large industry provider has that kind of thing where you can take photographs and it'll analyze. It basically decides, is this worth a human to look at or not, among other things. But I actually think the problem is even more trivial than that. Claims is a hard problem, but claims happens much less frequently than buying insurance. And so it's more like there's hundreds of millions of people who are trying to buy the right thing and are unable to even know what the price is. And that's ridiculous to me. Like, how is that? You would find it unacceptable if you drove into the gas station and you had to give them a bunch of information for them to tell you, oh, gas is $16 a gallon. You'd be like, what are they talking about? Let me drive down the street. And the funniest part about this is that prices in insurance are not negotiable. I think a lot of people are like, oh, I came into the guy and I offered him a good deal and I told him about myself and we worked. No, the whole thing is filed with a regulator in personal lines for this kind of product, and you just get what the formula kicks out. So I find it particularly disappointing that there isn't a more transparent pricing environment and a better experience for people just buying the right thing for themselves.
I didn't know that. I didn't know you couldn't negotiate for your insurance. I thought that there was a whole entire back and forth, like, oh, I guess you're negotiating on what you want insured, like this versus that, or I don't want this insured, I want that insured. But it sounds like,
except even for most people, that's not even possible. Like if you're driving a 2023 Chevy Malibu, you're not negotiating about you can discuss it. I prefer $300,000 in bodily injury liability versus $100,000, but the formula is just kicking out both of those numbers, right? There's no discretion occurring.
I see. So it's just literally okay. So for everybody listening, don't try to negotiate with your broker, your real estate agent.
The funny thing is, speaking of the scapegoat thing, the human in the middle often works to give people the impression that they're getting a great deal, and there's no law against that. They're like, oh, I really found these great discounts for you, and you check the discounts and it's like smoke detectors, and you're like, oh yeah, everyone's got smoke detectors.
So AI can really do a lot here. Like there's a huge opportunity for like AI startups or whatnot. Are you guys thinking about doing anything in that space, like AI type stuff for your products?
We use a significant amount of machine learning and some LLM based agents, both of which do things you would never guess. The hardest part that we're working on right now is what sounds like an incredibly trivial problem, which is merely predict the prices of insurance. And you're like, why is that? Surely that's the dumb part of the problem. But you could just walk down the street and look at each house and see wildly different numbers of how much people are paying for their insurance. And that is not necessarily because of the highly individualized risks of those people. It's generally because they're buying at the wrong place. So I can go find a customer who's paying $14,000 a year to unnamed carrier A and could be paying $1,600 a year with carrier B, and they just don't know about that difference.
And that is so that's part of what you guys are offering, is that insight into where to pick.
Yep, that's exactly what we do. We specialize in finding the best combination of insurances to actually maximize the value.
I know that there's like, what is it? There's a YC company, Carwoo. I think that might be it. It may not be that one, but there's a few of these like really, they kind of just open and expose like the prices of cars, where the dealerships don't really want those prices exposed. So there's going to be a natural tension always with, like, I would say, the people selling the insurance and you guys, just because you're literally exposing all of that for the consumer. Honestly, that should be the legal right of the consumer to see that. I'm shocked that they don't show
Decades
that.
ago in California, the California voters, bless their hearts, passed a law saying that it should always be public. And to comply with this law, the insurance commissioner has created a website where you can try to find out public prices. And no matter where you go on that tree, it basically always leads you to buying a 2018 Toyota Corolla in Sacramento. Because it's a very large space. It's not their fault. Like, predicting prices is actually quite hard. And so the poor insurance commissioner was like, okay, well, I got to build something here. And they didn't build a product as complete as we would prefer. But you're right. If the government did a better job here, I think we would all, Coverage Cat wouldn't need to exist, which, and that does exist. Like in Germany, there's a very different auto insurance climate where you just kind of see them all and you just pick.
Got it. I mean, it's similar to like NASA and SpaceX. It's like, sometimes the private markets can do a really good job at something and it just shines, and the government kind of embraces that and uses that. So there may be a future where Coverage Cat is like expanding across the United States based off of like backing of the government. That would be amazing, honestly.
John Arnold, who used to trade energy in Texas, tweeted last month, America is heading for a single payer healthcare system, and its name is United Healthcare, which is on track to be the highest revenue company in the world in like 6 years and its current pace of growth.
I mean, that's another like horrifying thing that's happening, is every year the insurance companies are raising their rates at a rapid pace that's beyond inflation. So like the consumers every year are like being squashed down in like what they can spend in their lives, or they're going to opt out of like health insurance. I feel like there's like a breaking point where like it's not worth insurance at all. Like, say it costs you, I don't know, $100,000 a year for health insurance, like not worth it, right? Like, I mean, maybe it is, maybe it isn't, maybe it's, but it's.
This is a beautiful illustration of answering whether it's worth it or not relies on your tolerance for risk and your net worth. And obviously, there are millions of people in America who choose to be uninsured for a variety of reasons. And if you're in that sweet spot, then yeah, there is a real reason not to buy insurance at the right times. And us helping you figure that out is what we're obsessed with.
So Coverage Cat, I mean, if someone opts out of insurance, it's probably because they don't know about Coverage Cat, right? Like they're not aware that they could maybe see something out there that fits their price point.
No, I would say for many Americans, there is not an insurance product that works for them. Just in an extreme example, talking about healthcare, for instance, if you're in the pool for which Medicaid will cover you, there probably don't go by. There's no private health insurance option that is appropriate for you. With, let's say, car insurance, it's different because you have a legal liability to carry car insurance. And I would say for almost anyone with any material amount of wealth, car insurance is one of the greatest opportunities you have to make yourself bankrupt if you pick the wrong product, because you can pretty easily do some serious damage with your car. So that's like a great example of, depending on your own bank account, you've got to make very different choices there.
Got it. So another question, it is a fintech podcast. Sorry, I'm going rapid pace. In the insurance industry, generally I'm assuming like people are given a paper check, so it's a slower process to get paid. Is that how the insurance world works, or is there like electronic payments?
You wish the check was the primary problem in insurance payouts. I think people have very different expectations of the rate of getting paid by their insurer. And depending on your expectations, some of my clients are incredibly delighted. They're like, oh, there was no fuss at all. I got in a car crash on Tuesday. They sent it to the mechanic. They sent me a check on Friday for the salvage value of, whatever. Great. But if your expectations are very different, then you can be very angry. You could be like, why haven't they paid me yet? It's been 4 business days. I would say, returning again to regulation, because of the pretty stiff requirements by regulators in personal insurance, you will generally get a payout that is reasonably quick. The check difference doesn't matter that much, but we're talking, let's say 60 days on the outside. But if you're someone for whom 60 days of no car is a very serious hardship, I mean, that's where you get into this really tough issue of where does the insurer's responsibility to make you whole, interact with all of that, cost of other issues.
Are they dragging their feet because they don't want to pay it? So say that they know that they need to pay it, like, do they drag their feet sometimes because they're like, well, if I wait 30 days, we keep it in the bank, we get the interest?
I believe there are some pretty large lawsuits by some states' attorneys general on that topic, in which some companies pursued strategies of intentionally delaying payouts, or much more severely, intentionally not settling in lawsuits they knew they would likely lose, because the time value of money exceeded the value of they knew the court system would take 2 years to produce an outcome, and that 2 years would be worth it to them to avoid the judgment.
Wow.
So you can go look those up online. Not everyone is like, I mean, this is where the lawsuit comes in. That is, they have a duty to you, and that duty is, I mean, it's actually one of the things that we provide when you interact with a salesperson directly at, let's say, Geico. That salesperson has no obligation, or let's say a minimal obligation to you. Whereas if you work with someone like Coverage Cat, our only financial interest is in your well-being. And we don't particularly need to uphold the needs of the carrier that you're with.
Got it. And going back to like Geico, so Geico a lot of the time pushes the insurance to a third party, right? So like that's another layer of complexity where
specifically about Geico, actually, I think they do a lot of retention of their own because of the Berkshire model, but this is details that I'm not privy to.
Got it. But I'm assuming some insurance companies, like, they can't cover something, but they're going to get a third party to cover it, like say a house or a building that's $20 million.
Yeah, capital light companies that rely heavily on reinsurance. Absolutely, this is normal. Yeah.
Interesting. And that probably creates complexities where money is not paid out faster because it's not one party. So you're going to the, person A, and then they have to work with person B. Person B is the one paying out.
I would be surprised if that is occurring. Generally, capital requirements are high enough that unless it's like the entire West Coast falls off of a cliff, which, I mean,
yeah,
there will be some disaster that eventually takes that cake. But until that point, like if it's some hail on your roof, it's got to be 18 states need to have had a lot of hail for it to be a problem. And that's because every insurance company is constantly under capital review and will not be allowed to participate in the market if they have insufficient capital to participate. But of course, that's a thing that people also said about the 2008 banking crisis, and look where that got us. So I'm making very little guarantee there. I'm just saying that in theory, such a system exists.
Got it. So there is the risk of the insurance companies not being able to pay out, but that's what do they call that? Force majeure, where like the world ends, that word. Right, like
force majeure is actually a hot topic in insurance. I love it that you would mention that. I think the joke with lawyers is that force majeure contract clauses are basically never successful in their litigation.
What do you mean by that? Like, what do you mean? What is a force majeure so that people know? Like, what does that mean?
I'm not your lawyer, and this is definitely a thing that if you actually have a force majeure issue to discuss, you should. But basically, people always claim that not always. One choice is to claim that this is a force majeure event and therefore it's not covered. And you are generally unsuccessful in that claim because although force majeure clauses exist in contracts, they're rarely enforced.
Okay. I mean, in my head, a force majeure would be, knock on wood, like nuclear war happens and
that's not a force majeure because in your if you go read your insurance policy, I can't guarantee, but almost guarantee
Yeah.
that it will say things like warfare is excluded, nuclear events are excluded. And so the history of insurance is, a code written in blood in which people have learned which things that they cannot predict the risks for and are unwilling to take on.
Got it. So force majeure. Okay, so it's not nuclear.
So a force majeure would be an act of God that is not enumerated in the policy, would be the
Okay.
most, so I'm trying to think of a specific example off the top of my head, but it's failing me.
Yeah, I mean, earthquakes are excluded a lot. Well, unless you get earthquake insurance.
Earthquakes would be specifically enumerated. Earthquakes are tough because there's often a delineation between earth movement, mudslides, and an earthquake. And so you might think that you're covered in one condition, but actually not be, because they'd say, oh, your loss was because of the resulting X, where like it was one thing versus the other. If you really hate that, there's a special kind of insurance you can buy that's difference in condition, where it will just be like, whatever your original condition was, we're going to move you to that. But basically nobody in the US buys that.
Interesting. So I'm trying to think of a good example of force majeure. It's like, okay, so electricity on the whole West Coast goes out and everyone loses their jobs. I mean, that's not a good example.
Here, I've got here's a brochure of all specialty insurance sold in the United States. And there's actually a specialty insurance product for force majeure to pay out in the event that a force majeure thing is ruled as a force majeure. So even within the industry, people are insuring themselves against that kind of a thing. But in practice, you're not gonna. I'm trying to think of where this actually comes up. I think you should consult with a civil lawyer if you're actually having this kind of thing.
Yeah.
But for normal people, this is not.
Yeah, not an issue. So just focusing on like the financial side. So ACHing doesn't happen in insurance? Well,
I'm just saying wiring. That the 2-day wait is so minimal compared to the 45 days of your car sitting in the junkyard and the assessor coming and looking at it and deciding what the right claim to pay out is. That's where the delay comes
in. I see. But the tech is paper checks primarily. We'll cut you a check is like what you've seen. Like, what have you seen? Like, what is the norm out there?
Mailed checks probably are the most common, but I mean, this is not a thing that I think about basically at all.
I'm just curious, like how
about half of the companies we work with send us money electronically, and about half of them send me a check. But this might just be me not filling out the right forms to have them correctly send it.
No worry. I mean, the insurance companies, whoever you're working with, I'm sure electronic makes sense. But I was just curious for consumers, like what the de facto is. But but not an issue. I'm sure it's probably paper check most of the time.
I think the real problem in payouts is almost always adjustment and claims handling. That's just the time latency there.
Got it. So I guess we're coming up at the top of the hour. Is there anything like consumers should know, just because everybody listening to this is a consumer, about Coverage Cat? Like, should everybody check it out? Like, what do you think is like the best option for like the normal consumer? It sounds like Coverage Cat, there's no downside like using it, honestly, in my eyes. So
there's no downside but your time. So, and we're respectful of that. Don't waste your time if you don't have an insurance need. But if you do have insurance problems, that's where we're great. We only do business in 5 states in the US. And if you're abroad, sorry, let me just tell you, by the way, the international problems of insurance pale because in the US, the insurance market is so large that you're just like, well, I guess I'm only going to work on the US problems. But so if you're in one of the states in which we do business and you do have insurance needs, absolutely check us out. I believe that we're the right way to buy insurance. That's why we're starting this company. That's why we're working on this problem. It's not because we are there to sell you a product. We're there because we believe people buy the wrong insurance and they shouldn't, and we can fix that.
Awesome. Well, this was a great call. I'm definitely going to try Coverage Cat. You sold me on it, so I'm in. And anyone who is interested,
just gotta have a call with every person in America, and then I can sell them on it.
But anyone who's interested, coveragecat.com is like the website. You should check it out and just see if your insurance is working for you. But this was awesome, Max. I learned a lot actually in this conversation. And thank you so much for taking the time.
And you regret knowing every single fact about it. You're just like, oh, please let that leave my brain.
I mean, for me, it's fun. It's fun to like learn about it.